A federal court says an embattled Federal Reserve governor can remain in her position while she fights the White House's push to fire her. Lisa Cook was granted an injunction while the dispute makes its way through the courts. The White House says Cook committed mortgage fraud on two properties she purchased in 2021. The judge says the allegations are not sufficient legal cause to fire Cook. The White House is expected to appeal. Some promising news for the U.S. economy. The tech company Oracle gives a stunning forecast for revenue growth, leading to a record run on Wall Street. Another boost for the stock market came after a surprisingly encouraging report on inflation at the wholesale level. Investors now expect the Federal Reserve will cut interest rates for the first time this year at their next meeting next week. Joining us now is Michael Busler, a professor of finance at Stockton University. Dr. Busler, thank you so much for joining us.
Thanks for having me, Veronica. As you know, it's always my pleasure to be here.
Wall Street is expecting the economy to pull off a delicate balance, slowing enough to convince the Federal Reserve to cut interest rates, but not so much that it causes a recession. Is Wall Street right?
I believe so. I think the Federal Reserve that meets next week will probably cut interest rates by 50 basis points. And that's based on looking at job numbers and the revisions to job numbers. It turns out that not only from March 23 to March 24, it was reported that job numbers were overstated by 800,000 jobs. It was just released that the following year, from March 24 to March 25, they overstated it by 900,000 jobs. And we know in May and June, the BLS, Bureau of Labor Statistics, overstated it by about 120,000 jobs a month. This is terrible that this data is coming out. But the Federal Reserve, which I believe should have cut interest rates back in May, I think will definitely cut them next week. They may go 25 basis points. I think they should go 50 basis points.
Put the earnings report from Oracle into perspective for us. Why is this forecast so important?
I'll tell you, they forecast such a huge increase in profitability. Their stock shot up, and they're very optimistic about the future in the products that they sell, the cloud computing and AI coming into this. With their forecast being so strong, a lot of the other tech companies are going to start coming out with, I believe, similar forecasts, and that's a big jump for the economy. If the Fed cuts interest rates, as I believe next month, and probably cuts them again in November and again in December, by next year, early next year, January, the interest rates will be a full percentage point below where they are now. That means mortgage rates will probably drop under 6%. Credit card debt interest rates will go down. Car loans will go down. It's a real positive for America. I think the Oracle statement and the Fed cutting interest rates should bring a lot of optimism.
Certainly something Wall Street and Main Street have been waiting to see. Now, we know another major report is coming tomorrow on the price of housing in the U.S. Take us inside the numbers on this, and what should we be looking for?
So housing prices, which have skyrocketed over the last few years, the prices have started to moderate. I don't think you'll see a big jump in housing prices in the report tomorrow, and indeed you may see a slight drop in housing prices, mostly because people who want to buy houses, they take a look at the price, they take a look at what the mortgage rates are, the resulting monthly payment is just too high for them to carry, and even too high to qualify for mortgages. The real long-term solution to the housing problem is get the interest rates down, to get mortgage rates down, and we have to start producing more houses. We have to increase the supply of houses. Not an easy thing to do, but I think that's what we're going to have to do.
Michael Busler, finance professor at Stockton University, thank you so much.
My pleasure, Veronica.